Okay guys, so welcome to today's video. I hope you are having a fantastic week and that you are making lots of money. Today's video is about how you can become a more profitable trader, how you can boost your trading and take it to the next level. One thing that I have used to take my trading to that next level is having a pre-trade checklist. Having a pre-trade checklist. What do I mean a pre-trade checking list? A pre-trade checklist is a set of rules or a set of conditions that you as a trader has before you take every trade, before you take a single trade. The market must meet your set of conditions before you place buy or sell. When I started trading, I used to just go on a whim. I used to just go on guesswork, and I didn't exactly have a way of getting into trades or getting out. Although I had a good strategy, I was not realizing the full potential of that strategy because I didn't know exactly when to get in and when to get out of the market. So having a pre-trade checklist has greatly improved the way I trade. As a start, it might be difficult for you to do the same thing, to have a checklist as well, but with practice and experience, these things will just come naturally for you. These things will just happen by themselves and you not even think about them. But it's important that every trader has a checklist. It's not the strategy. You have the strategy, but you also need to have a checklist that you use for entering trades. The strategy is the overall thing that you follow. Then the checklist is what you use for every trade. Before you enter a single trade, you need to tick every box or most of the boxes on your checklist. So let's get into what I look at. First of all, most beginning traders just look at the chart and they see price is dropping there, they enter a sell. Price might be going up there, they enter a buy. And really, they are not even following why they are doing that. I'm on the 15-minute chart. So you find, like in this situation, you don't know whether the market is going up or going down. So the first thing before I enter a trade is I want to know if the market is trending or is it ranging. If it's trending, I want to know it's trending in which direction. So especially for guys that trade on the lower time frames, it might be tough because the person now is going to sell there, sell there, sell there, sell there, sell there, or they might sell there hoping that price will continue going down and they get stopped out and they again try another sell there hoping that it's going to come down to this level. Again they get stopped out and things like that. It's because they are not understanding where the market is going. I love the 4 hourly to give me a picture of what is happening in the market. Then my other favorite is the 1 hour. Okay, let's take this section. Now, before you take a trade, before you do anything, understand where the market is going. Here, it's obvious. It's obvious. It's a bullish market, or was a bullish market. That's so obvious. That was so obvious. Now, because a person is not understanding where the market is going, you'll find many traders who will be selling here. They sell, and they are hoping that price will probably continue selling to down here. Again, another sell. Again, people are selling. People are selling in a what? In a bullish market. Another sell there. Another sell that happened there. Of course, the person might be winning with these sales, but if you notice, the person is leaving a lot of money on the table. Yes, their sales probably are ending in a profit, but the real money is actually in the other direction. Here, the market moved 94 pips, sort of nearly 94 pips, and it retraced 47 pips. The selling person left a lot of money, and it went up 65 pips, and it retraced 43 pips. The person who is buying, the person who is buying in this market is making more money. Here it went up 56 pips, and it retraced 26 pips. Again, the market went up 73 pips, and it retraced 47 pips. It went up nearly 60 pips, and it retraced by 26 pips. Then it went up by some 78 pips, and it retraced by just 20 pips before shooting up 116 pips. So in this instance, you notice that the person who has been selling in a bullish market has been leaving a lot of money on the table. The person who has been buying and going with the trend, has actually been making a lot more pips than the person that has been selling. Common sense, but you'll be surprised that many people neglect common sense in forex trading. So that's the first thing that I look at before I enter a trade. Am I in the direction of the trend? Am I trading with the trend? I don't want to be the person who is trading against the trend and leaving a lot of money on the table. So that's one of the things, first things that I look at on my checklist. am I going with the trend? Even the person who placed a trade here, I didn't want this line, but anyway, a person who placed a trade there or probably there, they didn't need to do anything. They just watched price go up and they didn't need to do anything. The market did everything for them and they collected 232 pips by not doing anything, by just trading with the market. So before I place a trade, I check the trend. Is my trade going to be in the direction of the overall trend? You get an idea of the overall trend from the daily, 4 hourly, and the hourly. You cannot get the direction of the market on the 5 minute, like here. On the 5 minute, it looks like the market is definitely dropping. But we know on the higher time frame that the market is not dropping. The market is bullish. The market is bullish. So if you're trading the lower time frames, it's important that you go onto the higher time frames and you check where the market is going. That's the first thing on my checklist. Where is the market going? Is it trending and is it ranging? It's also an important consideration. Let me look for an example. Let's say here we had a bit of a range there, although it was a quick short one. Market came in and it touched that range and the market went down to this level and it again went up and again came down. Some people would have thought the market would go up again and see what happened. It just tanked. It just dropped. So is the market in a range or is it trending? I usually prefer a market that's trending. A market that's trending, not a market that's trapped here, because you don't know what it's going to do here. You are not exactly sure of what it's going to do here. Of course, some people say that there was an M there or whatever things people see, but usually you do not know whether the market is going to drop or it's going to go up. However, when the market is like this, forming highs, like that, you know the market is going up. So you can buy with confidence. You can buy with confidence. Here, you could buy with confidence. Here, you can buy with confidence. You can buy with confidence. The market is making lower highs, lower highs, lower highs, lower highs, and it's going up. You know it's going up. So selling here, bad idea, bad idea, bad idea. You might win these ones, but you're just leaving a lot of money on the market. So that's the first thing. Second thing is I want to look at where price is at. Where price is at. Forgive my art. It's not exactly looking good, but I'm trying to make some points here. So in the lower time frames, say 15 or 5 minutes. Where is my stuff now? Here is an example that most people make. People will buy here. Oopsie, some of my lines disappeared there. Which line disappeared there? I think there was a line there. Yeah. Let's get back to that. I was saying you find people buying here. It does look like there's a buy there, doesn't it? But what happened? Price went only so far before it dropped. And if they had a stop loss somewhere there, if their stop loss was somewhere there, or they'd moved it somewhere there, it simply got taken out. However, so this was for, say, how many pips? Let's give them. Let's say they made 15 pips. They made 15 pips. But look at the person who sold from there. They made 42 pips. The person who sold from there, they made 30 pips. The point that I'm trying to drive at is I don't take trades when price is in the middle of nowhere. When price is in the middle of nowhere, you don't know whether it's going to continue going up or it's going to reverse. What you want to do is to wait for price to come to your significant levels of support and resistance. Let price come to your levels of significant support and resistance. When price is in the middle ground here, don't be tempted to enter. That's my second checklist. After determining whether price is in a trend or is it ranging or what's going on with the price, the overall trend, where price is going, I also look at where is price? Where is price? If the price is in the middle ground here and not close to an area of support or an area of significant resistance like there, I stay out of the market. In the middle of the ground here, you don't know where it's going. This is where they will kill you. That's where they will kill you. Where do you determine your levels of support and resistance? I usually use the daily and the 4-hourly. Okay, that's the daily. But I've also seen the 4-hourly works for me just as much. And I can drop down to the lower time frames. So, same story. I wait for price to come to that level. I wait for price to come to this level. Anything in between, I'm not interested. I'm not interested because in the middle ground, that is where they kill you. For example, here price went up and then it retraced and you probably sold thinking that it was coming all the way down here. And what did it do? It reversed and it went up. Many people would have their stop losses killed there. So I prefer having price at areas of significant support and resistance. It's not just horizontal support and resistance. It's also like here. This is your slanted resistance. This is your slanted support, your trend lines. They are also support and resistance. There, there. So I'm looking for these points. I need price to be touching areas of resistance and support. However you use your support, whether it's slanted or it's horizontal. Second point on the checklist. Third point is I am also looking for confirmation by my indicators. I don't rely too much on indicators, but I have indicators here, my trend lines. They are indicators. These lines are indicators. So I particularly love points of confluence, like here, where a trend line and a horizontal line, they cross and price comes there and it reacts. I particularly love these points. Okay, so after determining my trend direction, whether the market is trending or whether the market is trapped in a range, and I've looked at my levels of significant support or significant resistance, whether the price is close enough to levels of support and resistance, and I've looked at my indicators, confluence. I'm looking for confluence with my indicators. Now I also look at potential reward, risk reward. As traders, we are risk managers before anything else. You need to manage your risk. So here is what people usually do, because people are trading on lower time frames. A person would buy there. Okay. A person would, let's give it to them. Let's say a person buy there and that's potentially their stop loss. And this is their potential take profit. There is some risk and reward there, fairly okay. It's 1 to 2. However, I am mostly looking at least I must have a 1 to 3 risk reward ratio. So the trades that I'm looking for are at least 1 to 3 risk reward ratio. So that's the problem with taking trades in the middle of nowhere. You now need a very huge stop loss, and sometimes the risk is not worth it. Sometimes the risk is not worth it. The trades that I am looking for, the trades that I particularly look for, are these kinds of trades, which is why I try as much to wait for price to come to my levels. Price must come to me. So I also look at the trades that I'm about to take. What is the potential risk reward? What's the potential risk reward? If a trade does not look promising, I wanted to put it here, say there, and my stop loss there. These are the kinds of trades that I want. So I'm looking at the potential risk reward. I'm looking for trades that have a winning potential. Not these kinds of trades. What happened to my thing? Not this kind of trades. You sell in the middle there. There is your potential stop loss. And there is your potential reward. Of course, you are taking the trade and sometimes you might win, but you can tell the amount that you are risking because of this stop loss. It's a huge stop loss. It's too big for this kind of profit. So I try to avoid trades in the middle of nowhere for this reason, because I want my take profit, to be as big as Mount Everest, and my risk to be as small as can be. So that's about it concerning risk reward. Only take trades with a huge potential for profit. Try to minimize risk. If you took it there, and you probably, I usually place my stop loss just below that candle. So with this trade, there is potential for a very small stop loss, and potential huge rewards. Those are the kinds of trades that I'm looking for. Lastly, I am checking for news. Is there any news coming up that might affect my trade? Once I take a trade and NFP is coming, NFP moves markets. Nowadays it doesn't move like it used to. I don't know what changed, but you get the point. I look at, are there any significant market news that's coming up that might affect my trade, because this might look like a good setup, but because of the news, the market suddenly reverses and tanks. Although it was a good setup, but the news was terrible, so the market tanks. So I need to know the news, of course, because I trade usually from the hourly and the 4 hourly. Sometimes I really get affected by the news, because the brokers and the big banks will probably have already factored news in the market when they are moving the market in a particular direction. So you find that it's guys that are trading on the 5 minute or the 15 minute that are usually caught out or caught in by the market news. Then of course I also have to look at my lot sizing. Am I risking too much? Or am I risking enough to make a profit? You must not risk too much, but you must risk just enough so that when you are correct, you gain enough for that trade to be worthwhile. But you don't want to, when you are wrong, you lose so much that you blow your account. So you have to balance your lot sizing between, when you win, let it be a meaningful win. But when you lose, don't lose your whole account. That's your approach to lot sizing. So I hope this video has helped you or given you a new perspective. Leave a comment in the comments box below. Like this video, please like this video, and just show me some love. So that I keep talking to the camera, as it were, talking to you guys. I enjoy talking to you guys. So like the video, leave a comment in the comment box below. If you haven't subscribed to this video, please consider subscribing. Until next time, happy trading.